Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 14th of July. Starting off with AlphaFX, where we've got a nice rising trend channel here, which has been in place for quite some time. The current situation is that we've got the shares running up this trend channel, which has been in place for, I suppose, nearly a couple of years now, the best part of 2 years. The top of the channel heading towards 22 pence. Obviously, this is not one of the most fast-moving situations, but at least while we're above the 200-day moving average, just under 14 pence, 33 quarters, we're looking for 22 pence perhaps as soon as the end of next month, if we can get a decent breakthrough breakout through the 16 to 17 pence area. Covered Avacta earlier in the week, and I suppose given that a lot of people are hoping and praying that the shares will recover, it's worth having another look again. We've had a decent reaction from that narrow bear trap down to 118 versus, I think it was 119.5 back in January. Still looking for, at this stage, the support on the way down, which was around the 159 level, so above the low 130s, looking for up to 159 or 160 over the next few weeks on Avacta. On to one of the best, or the better stocks of the recent past, and a rather sort of quiet period that we've had. On to Cora Gold, and here the shares have done well. They built on their advantage after breaking through that peak we had there in October around the 10.5 pence level. Nice little breakout again through 13 pence today, so that's a very optimistic or a very positive maneuver, and it does make us feel that the idea of the shares hitting 20 or 21 pence at the top of the broadening triangle from this time last year is not as fanciful as it appeared even a few weeks ago. Upside value while we hold above 10.5, and the target there towards 21 pence on Cora, and that could be seen as soon as the end of next month. One of the better stocks of the year as well, back again, hopefully for a new push to the upside, is Kistos. Here we've got a rising trend channel from back at the end of November. Top of the channel currently heading towards £2.60, and while we're above recent support at £2, which was the weekly support this week so far, we're looking for 260 by the end of next month. So above £2 up to 260, reasonable risk reward situation on Kistos at the moment. 50 and 200-day moving averages are both rising and have been rising for months, which gives decent momentum to the situation. On to Open Orphan, which has had a flurry of news this morning. I suppose the highlight was Carl Friel, the executive chairman, buying 300 grand's worth of shares. He's obviously been looking at the chart recently, which has this line of support from October. That's running through around the 25 pence level. While we're above that, initial target here up to the 200-day line at 30 pence, and then up to 35 pence, which is that April resistance line. Big picture target, if you're a fan of the shares, maybe up to 50 or 55 pence over the next 3 or 4 months, so maybe well before the end of the year. Another popular play which people are wishing will trade higher is Omega Diagnostics. Here the stock has done a bit, sort of rather a mirror of what we saw at Avacta, where we've had previous support there around the 40 pence level. Also, there was a blip there lower, but previous support at 40 pence, and shares bounced well off that. What we'd like to see now is an end-of-day close back below that last low in June. That was at 49 pence, above 49 pence, looking towards the 50-day moving average. That's around 62 pence at the moment. Hopefully that can be seen by the end of this month. Stock which has been a long time sort of in the waiting room in terms of recovery is Plant Healthcare, but here we've got a bounce off of this week, seen a bounce off the floor of the rising trend channel from February last year. That was around the 12.1 pence level, and while we're above that, looking for a target here, well, basically to retest the best levels of 2021, which is up to the 19 pence area, maybe scrape up to 20 pence by the end of next month if we can get a decent weekly close above the 200-day moving average, currently around the 14 pence level. Quadrise is next, and I've been sort of dithering over the last few days, trying to sort of wait to see whether the shares have got proper action here, but it looks as though there's a firm footing here around the 3.3, 3.4 pence level, and any dips towards that area are currently regarded as a buying opportunity, at least while we're above the 200-day line at 3.2 pence. Looking for initially the 50-day moving average at 4.38 pence, perhaps by the end of this month. Stonking update from Phoenix Copper today. Shares have been in a sideways move pattern over the last, well, I suppose most of the last year, really, sort of 35 to 50 pence. We're looking for a long-awaited breakout here. Should get it. It looks as though with the latest price action, with the narrow bear trap below the 200-day line there at 41.5 pence, it could be quite imminent now, especially backed by the excellent news that came in today. Breaking that September resistance line just below 50 pence, say 49 pence, could be enough to give us a 2-month target up to 75 or 80 pence, which is the top of the rising trend channel that's been in place since, well, basically the end of last year. Just go back on that a bit, but we have, in fact, the April last year. So the 75 pence target, as I said, 2 to 3 months down the line. If we get a breakthrough 50, I suppose in the next week or two, one would expect that to happen now. Just a couple of stocks to go now. First is Tech Capital, which did the business in terms of the bull argument. There was a gap down for the shares in March. I pointed out that there was a gap close buy signal around 14 pence, 15 pence during May, and that's worked out quite well. It's also been backed up by a golden cross buy signal with the 50 and 200-day moving averages both rising there in the middle of June, so that was quite helpful as well. And at the moment, looking for 26 pence at that January resistance line projection. Hopefully that can be seen by the end of next month. Upside valid, at least while we hold above the latest July gap. Floor around 16 pence, and the 50-day moving average was just around that level at the moment as well. I interviewed Colin Bird earlier in the week, and that seems to have settled the market a bit, which is good. Here we've got, we had a falling wedge breakout, the breakout level around 3.4 pence. Good progress since then, and even better in the sense that we've had a gap. Yesterday we had an unfilled gap to the upside through the 200-day moving average. That's been held today, and the high of that day also broken, so that does confirm that we've got a decent bullish signal there. Next target here around 5.5, 5.6 pence, which is, I believe, where Colin Bird bought the shares last time. That's it for me today. More updates tomorrow.